Hey guys, welcome back. In today's video, we are talking about AMC exploding, the shorts bankruptcy, collaterals failing, and many more in this video. First, we're taking a look at this. Today is just one of a rapidly growing number of cases in the point of not massive off-exchange trading is keeping AMC from exploding. 80% of all buy orders routed outside of the exchange. I think I know how this will end. I buy, hodl, and wait. So when you take a look at the AMC off exchange, what you're going to be looking at is constantly at a very, very high percentage. During 11:05, we saw it at 80.66%. Going towards the end of the day, we saw it at 70.89%. So you can see how ridiculous this is. You can just see how much suppression is obviously going on for AMC. And the fact you have to realize 13 million volume was taken away from us. And so this is what we've said about in terms of, firstly, what's stopping AMC from exploding, what's stopping AMC from squeezing is because of dark pool usage. And you have to realize is that because of this, that instead they're internalized by market makers hidden from public price discovery. This means that the retail buy pressure is buried, your orders never influence the visible price, synthetic liquidity is created, these hidden venues enable fake share creation through derivatives and internal fills that never hit the open market, the true demand is diluted, price action you see isn't to the actual market demand, manipulation thrives in darkness. With most trading hidden, market makers can control flow, spoof sentiment, and suppress prices. And so this is in terms of why we never see AMC having the true price discovery, and also how it's being hidden from the true price discovery. And so you can see from here what happens during the dark pool orders. And so when you see a stock that experiences 80% in dark pool orders, you should understand just how much manipulation is going on and just truly how fake the price is. And so this is why we've said in terms of why AMC is not yet exploding is because of things like this. But you have to understand, if they are using these tactics, if they're resorting to using these tactics, it means that they need to hide something. It means that they're trying to prevent something from happening. And so if we know that if without dark pool, we're going to be seeing the price exploding, that means the people who are on the other end will get hurt. They will get bankrupted, they will get margin called. And so with this, we understand if we're seeing a large percentage of dark pool usage, it's because they're trying to protect themselves from short selling. It's because they're trying to protect themselves from all the shorts needing to be covered when the price go up. And so this is exactly why we know that the shorts are trapped and they've created such a big position that they can't cover even if they wanted to, because it will bankrupt multiple institutions. And of course, the bitter thing of all, and it's why they don't want this to happen, is obviously it will transfer billions and billions of dollars to the retail, and they hate to see that happen, is why they're doing this. And you can even see, we are seeing examples of how AMC has had its effect, whether it's in the past and how it's lingering even now. We talked about this briefly in terms of the AMC GameStop 2021 incident, and now you can see, is it coincidental that Apex, notorious for this incident, routed most of their order flow in January 2021 to the largest defaulting clearing firm on January 28th, 2021 to numerous internet. And so when I talk about lingering effects, I'm talking about how you're seeing multiple companies who were affiliated, whether it's with the brokering of AMC, the clearing of AMC, or just the shorting of AMC, to all not be in a good position 4 or 5 years down the line. Yes, they would have been affected back in January 2021, but if they claim themselves to be out of this, if they claim themselves to be 100% clear of any AMC shorts, then how are they still being affected even to this day? The reason why I say this is because we've seen positions happened with Archegos, with Credit Suisse, and how it's affecting UBS. And now, again, many of you may know, so I'll give a quick explanation for the ones who don't know. Archegos had toxic swaps of GME. Credit Suisse had toxic swaps of AMC. You saw Archegos going bankrupt, and then you saw Credit Suisse going bankrupt. Both of those positions were then inherited by UBS, who are seeing that they are losing margin. They're seeing that they're required to increase their margin requirements. They're on the verge of bankruptcy. And so that's one effect of what we talked about with how even the things that happened 4 years ago are still affecting companies now. Another one is with Nomura's Internet, what we talked about here, the largest defaulting clearing firm. Now, bear in mind, Nomura's Internet is a subsidiary of Nomura, and we're seeing how Nomura recently has been in a very bad position. Now, we aren't saying that anything's 100% connected because they aren't exactly releasing the full detail, but it is a coincidence. It is weird that all of these companies recently that we are seeing to be failing, to be struggling, have all got to do with being affiliated with shorting AMC. And so this is what we've said, is that this is how we have to understand AMC and GME is a massive threat towards these institutions, and they've been trying to hide this forever right now. And another example is, of course, the reverse repo. You're seeing it sitting at $5.9 billion. Now, it isn't at zero, but that isn't a panic. What we are seeing is, of course, how it's going down. 2 weeks ago, it was at 13 billion and it went up to 14, 15 billion. And now you can see 2 weeks later, it's down at 5.9. So we shouldn't be worried about in terms of, what happens day by day. But ultimately, in terms of the long term, is it going to zero? And well, it's seemingly looking like it is. And so if it is going to zero, we are going to be seeing how the shorts will be lacking liquidity. And let's give an example of how reverse repo is, of course, used. You can see a substantial portion of the securities received by us as collateral has been sold or repledged. JEF sold or repledged $20 billion of clients' collateral on top of big repo funding to cover its liquidity hole. And so this is what we've talked about. Whenever firms need funding, whenever firms need capital for their liquidity issues, they go towards the reverse repo. And so this is why we've said, when we see the reverse repo go to zero, you're not going to be looking at how easily these firms can get access to liquidity anymore. And if they can't get access to liquidity, you're going to be seeing how they're going to start to fail, how they're not going to be able to create AMC synthetics, nor finance the existing AMC positions. And so this is just how powerful we can be as we're drying up the liquidity. Another thing, now this is a bit old, but I'm curious to see if this is still happening to people. For those of you who still yet to receive their GME warrants, comment down below if that is the case. Make sure you are vocal about it. But the reason I wanted to talk about this was because we've seen so many issues happen during the warrants phase. You can see Schwab locking out users from account access for asking to exercise their GME warrants. So we knew how much of a problem these GME warrants stirred up. But then not only that, it was during this time we're seeing how XRP is back to 1,000% short with a 40% increase in borrow fee. This most certainly can't be related to GME, can it? So in terms of the warrants coming out, and a lot of people are seeing how, they were expecting GME price to go up. Now, one thing we've always said is that never expect AMC or GME price to go up naturally, because we are faced with the constant dark pool like we are shown here. But what we do know, what we have to understand is that we can see signs of why and how they're suppressing. So dark pool is of course one of them, but another one is when you're looking at XRT and you're seeing at 1,000% short rate and you're seeing a 40% increase in borrow fee. That really just talks about how much shares they're in need of, how much shares they're using, and it just then really implies and highlights why we were seeing them from stopping people to exercise their GME warrants, because by exercising GME warrants, it dries up the liquidity of more GME shares. It forces these brokers to locate more shares of GME, but if they are in need of XRT, which is one way of locating GME, then it just shows that they aren't actually able to locate real individual GME shares. And so this is why they were stopping these things from happening. And once again, you're just seeing the effect of what the retail can do and how these shorts are, of course, struggling. Furthermore, recently we may be looking at something that's obviously extremely big. As you can see here, BYND, Beyond Me, is cost to borrow spiked over 130%. Shorts are in trouble. So this is the big thing right now. We're seeing how short percentage for BYND is very, very high. We've even seen it go up 52%. You can see 24% at close. And so what we are looking at is just how potentially we could be seeing some short sellers being affected. Now, this isn't to say that this is the same situation as AMC or GME. However, if we are going to be seeing some short sellers who are potentially mutual short sellers caught up in the short squeeze or caught up in a situation where the liquidity is getting drained away, then we could also be seeing the volatility for AMC and GME. Now, as always, this is financial advice, so do take advice to go and so make sure to do your own due diligence and research, and I'll catch you guys next time.